We're still a few weeks away from the start of tax season, but experts are already speculating on what they expect tax refunds to be for this year. Are they expecting higher, lower, the same? And what will the impact be for you? I've got that and more coming up. So many people judge their tax season success, their tax return success on, hey, did I get a big refund or not? And I get it. I think that's only logical. That if I get a big refund, it was a good tax year. If I get a bad refund or small refund, or I owe, oh my goodness, something is very, very wrong. However, I would want you to grade your tax season or your tax return experience on, did you capture the right opportunities for you to pay the least amount of tax over your lifetime, if not multiple lifetimes? Did you capture the opportunities? That's how I would grade it, okay? And I do think, like, just to connect those two dots, I think oftentimes we think, well, if I got a big refund, I must have captured some opportunities, right? I must have gotten some really good deductions. But also, sometimes you know that you can capture all the right opportunities and actually get very small refund, or might even owe. And it's also possible that you didn't capture any big opportunities, but you got a big refund simply because you paid in too much. Instead, right, I want you to have that clarity that what are the tax planning opportunities that make the most sense for your comprehensive and unique financial picture, and then which of those strategies did you maximize and optimize so that you can pay the least amount of tax, maybe this year, but maybe over your lifetime or multiple lifetimes. That's how I'd want you to grade success this upcoming tax season. Well, tax documents are starting to be sent out. I'm getting a couple emails about that, but at the time I'm recording this video, no tax returns have been filed yet for the 2025 taxes here in the spring of 2026. However, experts are already speculating that they anticipate refunds to be higher this tax season than in the past. Last year, average tax refunds were over $3,000, around $3,100 as of the end of March. And that's even higher than the year prior to that. That's a big refund in my opinion. And experts are already expecting refunds are going to be even higher still. And they're saying, hey, that could be a boost to spending and really help the average consumer here in this K-shaped economic recovery. And that could be a helpful thing. Where are those experts kind of getting that from? Why would they think tax refunds could be a little bit higher? Well, a lot of it has to do with the tax law changes that took place in the middle of the year and created a lot of mess and a lot of confusion. However, those tax laws changes, some of them have taken effect immediately already for the 2025 tax year. And yet the withholdings, the payroll withholdings that happened through your W-4, through your paycheck that we all fill out, those didn't change. So some new tax benefits were created that will impact some, and withholdings haven't really changed, and so that could mean higher refunds. What are some of those changes? Well, one, the standard deduction got a little bit of a boost, okay? We started the year in 2025 expecting that the standard deduction for married filing jointly was going to be $30,000, for single filers, $15,000. Well, in the tax law changes, there was another year of cost of living adjustment applied to standard deductions. No idea why. There's probably a logical reason, but instead of being $30,000 married filing jointly, it's $31,500. $31,500 is married filing jointly, the standard deduction for 2025, and then $15,750 for single filers. So not an enormous change, but it all sort of adds up. So that's a little bit. Another reason then has to do with not just standard deductions, but if you itemize. More people are going to itemize their taxes in 2025, thanks to the cap lift, raising the cap for the state and local tax deduction. The cap has been $10,000, and for 2025, 26, 27, and 28, for 4 years, if your income's below a certain level, that SALT cap moves from $10,000 to $40,000. It's $500,000 of modified adjusted gross income that you need to be below for that state and local cap to be raised from $10,000 to $40,000. If your income's above $500, but not yet to $600, then it sort of starts declining. If your income, modified adjusted gross income, is over $600,000, you still are at that $10,000 cap. I'm seeing a lot of people, I've talked to a lot of people where they've gotten the standard deduction last year. They were capped out on their state and local tax deduction at that $10,000. But in reality, this year, they'll be able to get about $25,000 of deduction from their state and local taxes. And when you add in their mortgage interest and charitable contributions, they're probably going to itemize by about, 10 grand, an extra 10 grand above the standard deduction. And yeah, that's going to mean significant more refund, right? In a 22% tax bracket, that's a couple grand extra of refund just from that deduction alone. The big risk that we've shared with a lot of people with this issue alone is even if you've been getting the standard deduction in the last few years, don't put it on autopilot. Make sure you do the math. See if it makes sense for you to itemize, because that could mean a significantly bigger refund, bigger deduction, bigger refund for you. Next, for those of you with kiddos like me, the child tax credit got a meaningful increase. Now, numerically, you'd say, oh, this isn't enormous, but $2,000 to $2,200. $2,200 is a new child tax credit. That child needs to be under the age of 17, but that's a $200 increase to the tax credit. Now, deductions are good. So the increase in the SALT cap, so for itemized deductions are good. Credits are great because this is dollar for dollar reduction in your tax bill. So if you've got a couple of kids and and they're under the age of 17, it's $200 for each of them. That would increase your refund by about $400. And then finally, the plethora of senior deduction, no tax on overtime, no tax on tips, that's going to have an impact. And certainly the senior deduction is the one I would focus on for those of you that are age 65 or older. This is an extra $6,000 deduction. Even whether you itemize or get a standard deduction, it's an extra $6,000 as long as your adjusted gross income is below $150,000. If it's above that, you start getting a little bit less and less and less until it eventually goes away. But a $6,000 extra deduction, that's per person. So if you're married, could be $12,000. And again, if you get this deduction, but you haven't adjusted your withholdings, this again could mean an increase to your overall refund. So those are just a few of the reasons why experts are saying, yeah, it could be a bigger refunds on average this year. My question is for you. Hopefully, with all of the tax law changes, my goodness, not only this year, but in previous years, you can't take a passive approach with your taxes anymore. And you might not be a geek like me, and you might say, that sounds terrible to be proactive and be thinking about taxes all the time. I don't want to do that. I know, but your certified financial planner should geek out and love it like we do, like I do, where I want you to plan ahead for your taxes so that as you're preparing your 2026 tax return, you get it done, but before you file it, you compare it to your projection that you did in the fall of 2025 to say, did I capture all the right opportunities? And are there other opportunities that I should take advantage of here before I file this tax return to improve it, right? It's not just about, did I get a big refund? Is my refund higher this year than it was before? Blah, blah. It's capturing these opportunities. Yes, these 4 that I just mentioned, making sure that you capture and optimize them for you, but even the others as well. For this past tax year that you're about to file a tax return for and moving forward, I want you to do that proactive tax planning work. That's what leads to more dollars, hard-earned dollars, staying in your pocket and not going to Uncle Sam. So do that proactive tax planning work. Work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.